I've uploaded the latest portfolio calculator. We are looking at the latest results here, right sitting close to a worst case drawdown. But I think we're getting some resolution. The market started to act a little bit normal after the election, and we see 31.50 in the all strategy access. Good time to start. You want to start in a drawdown to buffer a drawdown or errors in your trading, technical errors. And so you see the drawdown curve, it is right there. It's been here before at this level, and big night last night actually in some of these strategies, and I'm going to show you that next, and then we'll continue to go over the rest of the portfolio calculator results. So looking at the E-mini S&P, we know that in bull mode a lot of times what happens is the market will gap up, rally, and then kind of roll over at the end of the day. That's why you have these strategies that try to take advantage of that pattern. It's trying to draw you in as a seller, and then you can get in overnight and catch that gap up again. And that's exactly what Asia 4 did. Now we've had a lot of chop coming into the election, so things have been off a little bit, and that's why we're having a drawdown. But Asia 4 long captured that plus $1,500 profit target last night on that exact pattern. We had after hours ES 2.0. Plus 1700. It has a time exit, not a profit target, so we have some diversity of exits there. And then we had Night Trader, which has struggled as well, hitting its profit target, breaking its losing streak a little bit, hopefully. And we have some strategies getting long at the open. It's hard to buy those gap ups, but this market's on fire and it wants to go into bull mode now. Seasonally, we are in a time period where the market could be very bullish. Historically, the market is bullish, most bullish October through beginning of May or sometime in May. October through April, really. Really, October through April is usually the most bullish time of the year historically. And so we could be in a very bullish period, and with the resolution of the election, the market can perceive less uncertainty. Whether you like the results or not, the market knows what to expect. It thinks it knows what to expect, at least. And so maybe we're going to have a strong, trendy bull market. Either way, whether the market ought to go up or it ought to not go up. We just trade what is, and there seems to be a lot of money on the sidelines that wants to buy this market. And one of the difficulties is if you're a day trader, some of the best moves are at night, and so with futures, you can still have the lower, you can still trade strategies like this that get in at the beginning of the future session that starts at right around 1800 or 6 o'clock Central Standard, 5 o'clock Central Standard Time, 6 o'clock Eastern Time. And then you're exiting before, you're not holding it during a time period when the market is closed. And so after hours, Night Trader, Asia 4 all captured that last night. And then you have strategies getting long here right at the beginning of the day as well. NQ, AT 2020 NQ, 60-minute breakout captured that move last night on the E-mini NASDAQ. VSD, one of our beta strategies, captured that move last night. It's up $3,000 overnight, and so strong bounce back. The trends are the trend is difficult to make money on the short side because it's so choppy. Every time the market goes down, the dip buyers are in, and so there'll be a time that there'll be smooth downtrends in the future, I believe. But right now, the downtrend is choppy and the uptrend is smooth, and so it's been easiest to make money on the long side. So, not to be confused for bullish or bearish. We do like smooth trends though, and they seem to be better on the long side and more frequent. So, if we enter a bull market period, you could potentially see some huge moves in this market. Nasdaq wants 12,500. I think S&P wants 3,600, and it could just go from there. Based on market perceptions. And gold, no trades. Asia Gold 4 short actually took a trade, minus 525. We lost on that. Minor compared to the gains in the stock indexes on that big gap up. Crude oil, no trades today. Natural gas, Esser Trend 3 hit its profit target, got short again, and so Euro, RBOB no trades, Euro going short up here near the highs, 118.43 area, plus 50 on the day so far. Soybeans, trying to short it again. Keep trying. This day trader, grain trader 3, keeps trying to short the market. One thing though that could be bearish for the market overall is inflation. We've talked about inflation by looking at soybeans. A Democratic presidency could lead to lots of modern monetary theory, money printing, stimulus, and inflation could go up. Interest rates could go up, and this could be bearish for the stock market. So you see higher prices in soybeans, $11 a bushel. Right now you could see beans in the teens, and something to take a look at. And here's the beta strategies that you see. VSD is long, only strategy to trade right now today so far, capturing those overnight moves. Just want to be a detective of this market and say, if you're day trade only, you're caught up in this this chop. It's harder to first hour, overnight in the first hour tend to be the best trends, and then you get this kind of a choppy uptrend, choppy downtrend, not a lot of clarity. Maybe you have a strategy for that. It's harder to trade in my opinion, but this gap continuation move really can capture some good moves and overnight as well. So let's go over the portfolio calculators. And so this is as of yesterday. This doesn't include last night's trade. So a bounce so far for all strategy access, and you can download the latest portfolio calculator. I'll show you where to do that at the end of this video. And it's been down. We had a drawdown at the end of July. We said get in on the drawdown. August was huge. September, October, choppy before elections, but more choppy than normal at higher prices, so more volatility. And then tough start to November with the election. And then now that we have some resolution, we are right at that worst case drawdown, and great place to start if you're looking to buy in to something that's had a losing streak that has a historical winning streak or historically profitable. If November's averages are up, just to get back to zero, you're 10,000 away. Actually, overnight, those gains have been pretty good overnight. So let's look at stock index portfolio 19. It hit a worst case drawdown yesterday. So that's what I'm saying. You have to, as volatility increases, as we get a greater uncertainty over time, you're going to get bigger. You can get bigger drawdowns, and so we're at that. You got to buffer that, and then potentially look for a bounce in that. 24,625 in the stock index 19, stock index 36. 36 strategies is $27,000 out of $42,000 drawdown, and it's been on a losing streak as well. And during these uncertain times, but it is not. This one's not at a worst case drawdown. So you have a little more diversity with this strategy, a little more raw, trading a lot of algorithms that are just basically very simple. 200K portfolio, close to a worst case drawdown, only $500 away. And so it traded some of the strategies from last night are in this portfolio. So looking for a bounce in this portfolio as well. It's been here before. We were here. The time frame for that was it's always hard to get these dates on these charts in Excel. You have to click on it, and then you have to wait for it. Was 5/26/2020, kind of in the towards the first few months of the pandemic, first couple of months of the pandemic. And so we've been here before, looking for a bounce. This made a worst case drawdown during the pandemic. And so that's what we're talking about, is the drawdown was here at this level. We had increased volatility, and it made a worst case drawdown. But then it bounced back. And so as time moves forward, prices go higher in markets. You have to have more capital to trade them. And that's one of the reasons why the exchanges and the markets in general, Wall Street, have created these smaller micro contracts. This reminds me of the late 90s when they created the minis. So in the late 90s, they had the big S&P pit traded, and it was $500 a point. $500 a point. Then they cut that in half. And pretty much after they cut that in half, the market moved higher, had higher ranges. higher daily ranges because the point value was smaller and it took more of a greater move to get the same profit per contract. And so they do this. They do this with intention as markets move higher because smaller traders can't get in at current margin levels and at current volatility levels, so they create smaller contracts. You have to think about over time if you're going to have an S&P, at some point 10,000 or 20,000, you have to have smaller contracts. And so it was $500, and then it was $250, and then they also created the minis at $50, and now they've created the micros at $5 a point. And so as markets move higher, they'll always adjust, and then that can sometimes be a catalyst for higher prices and bigger daily ranges to make up for smaller contracts. So the micros could be the new minis, and if you're used to trading the minis and your account's on the smaller side, then less than 100,000, or in some cases, depending on how many strategies you trade, less than 200,000, you might find that micros would work for you to take advantage of more strategies and less stress. If you find it stressful, micros, you could deleverage with micros. The slippage and commission is higher, and so I think over time that will adjust though, and it will do better. You'll do better with slippage and commission in those smaller contracts. So 25K, 50K portfolio, it hit a worst case drawdown this month as well. All these strategies, this has been a solid performer. It's still up on the year after a terrible October, terrible start to November. It hit Night Trader last night, but still up on the year. It's been a solid performer. There's only 10 strategies, so we don't have as much diversity, and because we don't have as much diversity, we go into this drawdown as volatility increases. You see that here, we're waiting for a bounce, but we have to sit through these things. Sometimes we anticipate this. In the past, I used to say, I'm going to create a strategy and I just hope it doesn't go through a drawdown. Now we have to have an anticipation of, okay, let's start in a drawdown, anticipate a worst case drawdown, and have a strategy for when it happens, because markets change and there is no perfect solution for these. So you have to be ready for a worst case drawdown, and what are you going to do and how are you going to adjust and be well capitalized to do so. And so we can make adjustments to this going forward, but right now we are waiting for the market. The market is resolved a little bit, I think. We'll see, and so we'll see if the market goes back to its normal bullish mode, and we can get some resolution and some bounces in these portfolios. So 25K, 50K, micro stock index and gold portfolios sitting right at $500 away per micro. So you're trading multiple micros. If you're trading 5 micros, you're $2,500 away. If you're trading 5 micros, you're $15,000 down. If you're trading this on the minis, you're down $30,000 out of a $35,000, $36,000 drawdown. So this is 1/10 of the minis, and you're down, this month and last month, and it's up on the year though. It's up on the year, and let's look at the drawdown curve again to give us perspective of where it is. Great time to start this if you haven't, and you can start this here and buffer worst case drawdowns. This means if you say, okay, I'm not just going to hope it doesn't make a worst case drawdown, I'm going to start in a drawdown, and if I'm trading it myself, I might have errors, or it might make a worst case drawdown, and then I can manage my risk like that. Trading is about managing risks and expectations. And so micro gold, 100K portfolio, it is 13,000. It was at equity peaks last week, and just really choppy, fast, rapid drawdown. We anticipate rapid drawdowns. Actually like rapid drawdowns. I'd rather have a rapid drawdown and then a recovery than a slow grinding drawdown. And so it says a rapid drawdown. And then the liquid day trade portfolio, it is right here, 1,000 away from a worst case drawdown. So it's been affected by the SR counter trends, and you see that it's right here at this worst case drawdown level. And the SR counter trends, let's look at the SR counter trends. You can see this slow grinding drawdown. The length of the drawdown is long because of the SR counter trends related to this. And the SR counter trends hit a worst case drawdown. We are looking at these closely. It's hard to find an adjustment for this because the market almost the exact opposite works with the V movement since the pandemic. So this worked well the first quarter of 2020. Look how well this worked. And it's one of the strategies. I like the SR counter trends because a lot of them trade the exact same parameters on all the same markets, and I never had a strategy that would do that. And so it's strange that a strategy that works so well on so many markets with the same parameters in general is going through this, and it just tells you a shift in the market. And sometimes the market starts to do the exact opposite, and you see these V patterns in the markets instead of waves. And so it's complex, and looking for adjustments on this, and the portfolio is related to SR counter trends, but we could have some resolution as well. So sometimes strategies and portfolios do this, and then they correct, and then what you change to doesn't work, and what you changed from does work. So you hate to make knee-jerk reactions. You have to sit through things sometimes and be willing during extreme market conditions to adjust or scale back or sit through it and manage the risk and make adjustments if it doesn't change after the market resolves itself. And so we're looking for market resolution to more of a normal market environment now that the elections have the voting is almost over, the resolution is almost over one way or the other. I guess things could get crazy again if there's more contested. If it's contested beyond, I guess, this week, maybe things will get a little bit crazy. But the market perceives, we talked about the Tom Lee insights the other day. It didn't matter what happened. If there was a contested election, 6 to 8% rally, a Biden win, 10%, a Trump win, 15 to 17%. So right now it's contested, so it's going up. Then if they announce Biden wins, it could go up. And then if they change it to a Trump win, it could go up even more. Either way, Tom Lee says after the elections, people just want to buy. It's that seasonal time of year where people buy. They add to their 401ks or IRAs and portfolios at this time of year. You could do that throughout the year, but I think a lot of people wait till the end of the year to add additional money to their retirement accounts. And so November through October through April, I don't know why I put November, but I'm putting November this year because of the election. So that October through April did not work as well this year, but because of the election. And then November is November this year. So November through April, seasonal bullish period. So that's what we are looking at and what we see the market doing with the ability to adjust and change at any time to bear market mode, because we do have strategies that go short. That is the update on the portfolios post-election without necessarily a result yet.